And Michele Bullock, the RBA Governor, speaking now after cutting interest rates a little earlier today.
Cash rate by 25 basis points, and that takes the official rate to 3.85%. Now, we've done this because the most recent quarterly CPI confirmed that both headline and underlying inflation are now under 3%. And if you ignore the more volatile items in the headline CPI, our forecasts see the underlying pulse of inflation around the midpoint of the 2 to 3% range over the next year or so. So price increases have slowed and it's fairly broadly based, and this is very good news. The board's strategy over quite some time has been to bring inflation down while avoiding a sharp rise in unemployment. This is consistent with our dual mandate of price stability and full employment. I know this period of relatively high interest rates has been and continues to be challenging for many households and businesses, but it was essential we brought inflation down because inflation hurts everyone. The strategy that we took to achieve this was different to that of some other central banks who took rates much higher than we did. The board accepted the trade-off that leaving the cash rate where it was would bring inflation down more gradually, but without a big increase in unemployment. A sharp rise in unemployment would have been very costly for families and for the Australian economy. Anyone who has experienced unemployment knows the profound impact that it has on your life and those that depend on you. Anyone who's experienced, when the unemployment rate is elevated for an extended period, that's not only debilitating for individuals and their families, but it also has significant negative impacts on the economy. When inflation is low and stable and people can get jobs, it's good for households, it's good for communities, and it's good for the broader Australian economy. So the cautious approach we have taken has got us to this point where inflation is now below 3% and employment is holding up. But now we've got inflation down, we must keep it there while trying to maintain a healthy jobs market. So there's now a new set of challenges facing the economy. But with inflation declining and the unemployment rate relatively low, we're well positioned to deal with them. The board remains prepared to take further action if that is required. Now, since our last meeting, global economic and policy uncertainty has increased substantially following tariff announcements by the US administration, the response of its trading partners and subsequent changes to the policies, including various bilateral agreements and deals. It's been a complete rollercoaster, I'd have to say. How the tariffs will affect the global economy are going to depend on a few things. Where tariffs will settle following negotiations between the United States and its major trading partners, how the other trading partners respond, the extent to which global supply chains are disrupted by the increased barriers to trade, the degree to which trade can be diverted, and the impact of uncertainty on business investment and household spending. Our baseline forecasts that we released today for the global economy reflect the potential economic impacts of higher tariffs and impacts on consumption and investment of policy uncertainty. We see growth in our major trading partners slowing over the remainder of this year and next year. In terms of the forecast for the domestic economy, we see growth and demand picking up, but a little more slowly than previously. This sees inflation declining a little more than previously forecast and the unemployment rate a little higher. Some of this reflects the downgrade to world growth, but some of it also reflects the effect of uncertainty on domestic demand. If the trade outcomes are much worse for the global economy, though, we could be facing a much larger downturn in Australia with implications for inflation and unemployment. One thing to keep in mind, we have made the judgment that global trade developments will overall be disinflationary for Australia. However, there is a risk to inflation on the other side. The trade policies could lead to supply chain issues, which could raise prices for some imports, much as we saw during the pandemic. And so we'll also need to be alert to such upside risks. So thank you, and happy to take your questions.